Hey everybody. So right now I thought maybe what I would just do is again run you through some of the settings as we're now what's in called power hour, right? It's the last 60 minutes that the market's going to be open, and it's when volatility is also at its highest. Reason being is it's Friday, right? About 40 minutes till the market closes, and options premiums will all expire worthless if they're not in the money. So you can see up here I have SPY on a 5-minute chart, and we're trading right now at 561.54. So it's this red candle right here. You can see we topped out here. We are all the way down to the low there. So let's say you just want to play the market to the upside, thinking it's going to go back to the highs and finish somewhere up here. Well, what you would be doing is you would be playing the 562 call. So you can see here, we click on options, I type in SPY, and the calls are on the left, the puts are on the right. So right now, a contract is trading for $38. If I want to get into a position thinking we're going to hit 562 by the time the market closes, which again would be somewhere up in a range up here, that's what I would be playing. Now, if you think we're going to have a sell-off back down to VWAP, which is probably not unlikely because we were there and then we bounced higher, I'd be playing the 561 put that's at about $26. Now, mind you, these contracts are really cheap. Why are they really cheap? They're really cheap because they're going to expire worthless if we don't start pushing quick. So I'm going to get into some contracts, and let's just have some fun with this. And you'll see how quickly they move volatility-wise, but I'm going to buy 200 contracts, okay? So you can see that when we're getting into the last 30 minutes, the market has to make its move. And if it does, you will be rewarded exponentially to the upside. But then if it doesn't, you will be penalized severely to the downside. Reason being is there's not a lot of time left to get the direction right. So mind you, we jumped in at $44 a contract. They're now trading at $50. You can see all the buyers, all the sellers. So if I want to put a stop to make sure that I don't lose any money on this trade, I could put it right here at my purchase price. Now, mind you, you're still going to have to pay the fee of 65 cents a contract. So you still have that as a baked-in cost. You can see SPY is probably moving a little bit faster than the Qs. Right now, we're up about $1,000. And I'm just going to go ahead and put my stop here at $200. So if we push back down, I'm going to get stopped out at least in profit. Now, as we're moving higher, I just click on this and I drag it up. So now I'm going to be at least $400 in profit, okay? You're going to notice there's a ton of volatility, and we just got stopped out with $400 in profit, which would not have been a good trade, right? Because I risked $8,400 to make $400. That's just crazy. You would never do that. But this is also why traders like to play the last 30 to 60 minutes because of all of this volatility. So let's just do it with some smaller contracts. Let's just do 10. I still have $450 on the line, and you can see that if we don't start to push higher quicker, then I'm going to drop back into the red. Now, would I ever want to just put my stop down here in losses? I would not. And the reason being is if the market wicks down like it did on this candle here, I would have been stopped out. Well, looks like we're now playing to the upside with some momentum. Look at this candle down here. You can also tell that we are technically overbought. So again, I can go ahead and just click my stop here. You click in the red to set your order, okay? And then as it moves higher, you will drag it up. Again, we got stopped out at break even. So I just, again, want to show you exactly how to pick the contracts. Click this drop-down box. You have to load the contract number. You can see here, SPY, August 23rd, call at 562, $45. It's the at the money. If I wanted to go out of the money, I'd be at the 563s, but I don't think it's going to push up 1 full percent, but you never know. Let's see if there's any orders. Not as many, right? They're big bulk orders and they're just kind of betting that this thing could push higher. Let's just do it for fun. We'll buy 200 contracts at $17 a piece. You'll see that we're not getting as much movement. The reason we're not getting enough movement here is because we are still a full 1 point off. And while we have 30 minutes to get there, it is possible, right? But it's not highly probable. So therefore, you'll get less volatility in this contract. Now, you'll also run the risk of, if we don't start approaching 563 in probably the next 20 minutes, these things are going to be worth nothing. And they'll drop down to 13 cents or $13 a contract, $10, $8, $7, and then there will be no more buyers. They will go away. And you'll be holding the contracts and they will literally expire worthless. So you have to be very cognizant of this. Now, if I want to get out of the trade, I can still get out at a minimal loss. I'm going to let this play just for another second and see if they move. But look at the sheer volume. They're buying 8,000 contracts. They're selling 3,000, 2,000, 1,500. They're buying 9,000 contracts down here. I mean, that's just crazy to think, that somebody's putting on a $100,000 trade. But it's how they're hedging this and they're moving the market. Now, there we go. So this is going to be the power. If this thing moves higher, that these $17 contracts could literally be worth $2,200. And if you think about it, that's how you get a 50%, 60%, 70%, even 100% in a matter of minutes. So right now, we're at least at break even. I could set my stop. Let's just kind of see what happens here if they keep grinding this thing higher. It's always good for you to kind of just watch the markets and how they function. Now, would I buy puts here? No, I'm never going to buy puts. I mean, look at the strength of this going up to the upside. I mean, don't ever short the trend, right? Go with the flow. Go with the trend. The Qs is moving up. Pretty good trajectory, but look at how this bounced off VWAP. This dipped all the way below and then is now moving higher. So we're going to break this pivot right here. Looks like to the upside. I'm just going to go ahead and select this so you can see what I'm talking about. Right here was a point of resistance throughout the day this morning. We're starting to break above it. The point of resistance for this is up here. My stop is below. Again, we're not seeing the volatility quite come in yet because it's starting to sell down. But if we break above this, you should see these start to explode to the upside. Qs is flirting with the level. You can see here how it's little resistance. Now we're starting to break above. SPY is starting to make a move back toward liquidity. Again, this is where the sellers were in the past, right? We pushed up here at 8:15 in the morning, sold off. So we got stopped out at break even, okay? See how it got all the way up here to the liquidity? Prior sellers turned into sellers right here. Now what it should do is back off if they're going to make another move higher. Same thing happened here with SPY. We have an area of interest that you would normally go short to push down. We were overbought. It's starting to now round off. Volume was increasing to the upside. Same thing here, kind of stagnant. We were overbought. Now we're trending lower. So would I go into puts here? Well, first and foremost, if it was a normal day, like it was 8:40 in the morning, I would consider that. But I'm not going to do it right now because there's only 30 minutes left in the day for us to be right. So if I was going to buy puts, I'd be in the 562s. I would not be doing the 561s, right? And same thing with this. We should have been in the 562s all along, which are now in the money. So that would have worked out better. Let's go ahead and just see what this is going to do. Roll over. Let's just jump in some puts and see how the market manages this. There we go. So you would normally never want to do it on a pullback when you're trending higher, right? So you can see it looks like it filled my order twice. So I have 400, which is like an insane amount of money, but it's easier for you to see the volatility. Now, if we don't start dropping and we're moving up because we're in puts, these things are going to start losing money very, very quickly. However, if we start to drop, then we'll see some momentum to the upside. Remember, you buy puts on pops and you buy calls on the dips. Now, again, we're fighting the trend, which is not a good thing to do. If you were going to take the reject, we should have taken the reject up top here on the Qs, where it was clearly able to be identified. So let's give this another second here. Right now, we're down about $1,600. But it looks like the market, they're going to try to maybe push it higher to close on a strong note on a Friday. Coming down slowly. Volume is slowly decreasing. But let's see if they pick up the speed to the downside. Now, where would I have a stop here? Again, I typically would not put a stop until I want to stop out of the trade. Reason being is you run the risk that they wick it down, stop you out, and then they dump it, and you literally miss the entire trade. So we had a push up, we're coming down. They tried to push it up, we're coming down a little bit more. What I don't like about this is, again, which is why I would have never shorted this, we're above the 9, we're above the 21 EMA, and we're above VWAP, right? We did come into resistance, but I should have taken my put when it hit up here. This is confluence trading, right? I could have taken it in the Qs. I could have also taken it in SPY. As one goes, the other will generally follow. Looks like we're starting to lose a little bit of steam, but still, you can see SPY is stronger than the overall QQQ. We want to see this one dump, and there we go. There we go. Come on. There we go. Look at this. We're back in profits. Okay. We're in the green. There we go. 561. I'm going to at least secure us $400 in profits. Now we're up 2,800. Now we're up 3,200. And stop this out. Okay. So that's how fast these premiums are moving in the last 30 minutes, 60 minutes, which I never trade this time of day. But I thought it would be a really good lesson for me to show you how volatility works on 0DTEs. So hopefully you had a little bit of fun with that. If you have questions, let me know. And I will talk to you guys all soon. Take care.